Get that first 3 months sorted for your bank statements, your pay slips when you come for your mortgage advisor, for your first mortgage interview. Just carry on that conduct to at least you've completed, and the estate agent hands you keys, and then whatever you want to do after that.
Perfect. Hi everyone, thanks for tuning in to the Mortgage Heroes podcast, proudly sponsored by Hamlet Homes Warrington, your Warrington property experts. Now today we've got a fantastic episode lined up, talking more than just the high street with Kensington Mortgages and Phill Pinson. How's it going, Phil?
Very good, Sam. Thanks for having me.
No worries. Thanks for coming all the way from sunny old Stoke. So today we're going to be talking about Kensington and who they are. But listen, I know loads about you, but for those who don't really know much about Kensington or your sort of role, tell us a bit more about you. So
about me, I've been in financial services for around about 25 years. I started off as an insurance underwriter around about mid to late 90s. I then saw an opportunity with Britannia Building Society around about 2005 as a mortgage underwriter, and I thought, well, you're underwriting something, it's going to be very, very similar, so I jumped into mortgages. I then realised they were two completely worlds apart. After several months of getting my head around mortgage policy, etc., process and criteria, I sort of continued doing that for probably round about 10 years plus, and then I slowly moved into a sort of internal sort of salesy business development role. And then for the last few years, I've been out on the road, catching up with you guys and sort of spreading the word. So as I say, I always say when I speak to brokers, always drop in the fact as an underwriter. I think they like the idea that you're going to be the person who actually isn't just a salesperson, just trying to tick a few boxes. As someone who's going to really take care talking around them cases, especially the cases that the Kensington come across, and as some of the cases me and you have discussed probably recently or for the last few years I've known you. So yeah, I think having that underwriting knowledge and sort of be able to present to an audience and then giving them the heads up on what they need to be doing and looking for when presenting a case to Kensington.
So something you said there that I always say in the office is, I wonder who these bloody underwriters are. When you get those little emails and it's like, we need to understand this, this and this, or send me a bank statement from 12 months ago. It's you? You are that guy?
Yeah. The underwriters, the decision makers, these are the people who you want to sort of present a case to, cover off any sort of areas where they may be questioned. I always talk about presenting cases to underwriters, try and be transparent with them. But, these guys, they are, they haven't got two heads. They don't live in ivory towers. They do speak to brokers. But as I say, the decision makers, so they'll have mandates, so they'll have certain restrictions that things they can do. Others might be able to do more than other underwriters. They'll be audited, whether it's internally or externally. So when they are asking to these things, it's not just a matter of us trying to make life as difficult as possible because, I generally get the phone call, but there's a reason why, and we can go on later on in this episode to say reasons why things are requested. Again, it's always sometimes a broker ring me, why is this? There's usually a valid reason why. And again, when I present cases or present to brokers who are definitely not familiar with using Kensington, it's almost giving that expectation, saying, we're not, and again, we'll talk about the difference between ourselves and the high street, things aren't going to sail through, it won't be as automated, people will ask questions, and I think sometimes that's that benefit of actually having an individual human being looking at a case who will throw up a few questions than a case that's just declined without any reason why.
So if there's any brokers watching or listening to this episode, be nice to the underwriters, because it might be someone like Phil that comes and has a chat with you about your cases. Brilliant stuff. So I know a lot about Kensington, and obviously we're working in this space day in, day out, helping hundreds of families across the UK. But to somebody who is new to mortgages or is trying to find the feet of buying the first house, who are Kensington?
Yeah, so Kensington are in a space where we call ourselves a specialist lender. So what is a specialist lender? Well, usually people would probably first port of call, if looking for a mortgage or savings or anything, would go to their bank. Maybe they've banked with them like me, HSBC since I can't remember. They've got a relationship with maybe that particular bank, and they'll offer them a mortgage. Sometimes people's circumstances haven't necessarily gone according to plan, without stating the obvious, what's happened in the last 18 months. People's incomes have been affected. People's circumstances changed. So Your high street lenders may be a little bit more what we call vanilla, a little bit more straightforward. They might be reliant on things such as credit scores. So when you do see the papers on a Sunday and certain lenders are offering really mouth-watering rates, like even now less than 1%, there may be an appetite that particular lender's looking for and a particular type of customer. So with Kensington, so who are Kensington? We're just a sole mortgage lender. We're backed by a private equity firm, and we've actually come up to our 25th birthday. We've just celebrated our 25th birthday recently, which I think being aware of anybody who's old enough to remember the whole, financial market has had its ups and downs. We've had recessions. We had obviously the COVID situation. And in fairness to Kensington and all circumstances, have managed to sort of weather that storm, and we're still here. So we're sort of more there for your customers who don't necessarily fit the profile of maybe what the high street wants. I do massively support the high street. I think it's got a massive offering for customers. But also, we're there to sort of mop up them sort of cases, or where people's circumstances have changed, or somebody's got particular unusual income streams, or your self-employed customers. And as you know, being a mortgage broker, it's probably been very, very difficult for your mortgage to place a case for your self-employed customers, say, without stating the obvious of what's happened for the last 18 months.
Yeah, perfect. So in terms of Kensington and the high street, what sort of differentiates you from the sort of criteria? Because we kind of have all these stories, you need your 6 months pay slips, you need this, you need 3 years accounts. But I mean, why would someone use Kensington over the high street?
I think the initial reason people tend to use us, I always say I'd like to be your first, second choice. You'll be dictated by things such as sourcing tools, which will say this is going to be the best rate for your customer. But as you know, sometimes that 0.85% rate isn't going to be suitable for your client because they don't fit on criteria. So you're going to move away from the top and work your way down. So then you'll come across your specialists. So at the moment, some of the big headlines I think we're quite good at is people with adverse. We've introduced a product where people may have had adverse in the last 2 years. So because we're not credit scoring, if it fits that criteria, so you have no reason why we can't accept that case. Now, with specialist lenders is what's known as price for risk. So if you're actually dealing with a customer who's had some sort of life event in the last 2 years, I always say things like death, divorce and employment, it's very unlikely that someone like the high street who are working with a credit score would want to take that customer on. They may want to take that customer on if that adverse was quite historic. So we're looking at customers maybe who've had some sort of blip or some sort of life event that's caused them to have CCJs and defaults. They've got a favourable approach. And again, we've got a lot to shout out with self-employed customers. Some lenders tend to look at a customer's track record of income and maybe want to use an average. One of our strong USPs is that we were happy to use a customer's latest year. So if a customer's income has shot up, maybe let's say certain trades, try to get hold of a builder, a decorator, a plasterer, these guys have probably been going for years and probably noticed a massive spike in the business. We can see that's sustainable. So we're going to use its latest year. The high street may have a more cautious approach to that and average it. And so if somebody's in a startup year one was really quiet, year two, they're flying, they're not really going to get a big lend because that particular lend will say we'll only use 50%, an average of that income. Whereas say our strong USPs will use the latest year.
Yeah. So there's definitely differentiating parts of criteria, should we say, of what you would offer as opposed to the high street. But like you said there, I'm guessing what you offer to the high street is a higher rate priced on risk. So as a lender and sort of going into the crux of it all, how do you determine a price for an interest rate? Is it a finger in the air or is it a thought out process?
Yeah. And it's a very good question. We as BDMs meet up with our product team quite regularly. We're always feeding into them guys of what our peers are doing. I'm not going to name who they are because I don't want to advertise them. I get on well with the BDMs and they know who they are. But yeah, so we won't be sort of looking at what, the likes of the Halifax or the other, let's say mainstream or high street lenders are doing. We want to see what our peers are doing. I don't think we really want to get into a rate war. We obviously want to get market share. I think you've got to be careful with, rate wars because it's going to affect your service. So from a pricing point of view, we'll feed into things like criteria, what other people are doing. But if you're working in quite a specialist space or where someone has got adverse, you're not going to be knocking out rates at like 1%. So we have got some quite headline rates. I think we just recently had a 1.99 at 70%, which is when you tell brokers that, they're unbelievable. So I'd say price for risk. So it's likely, if we, for example, we do 85% on buy to let, I don't think to my knowledge there's any other lender doing that. Them rates are going to be in the 5s, which some people go, why is it going to be that much? But because no one else is doing it.
Yeah.
If someone's had defaults quite recently or got a track record of, a poor credit file, you're not going to get that 1% rate. And that's where our rates will probably looking into the 4s and the 5s. But it is, people have life events I've mentioned earlier. So it is sort of an opportunity for the customer to go, right, I want to get back on the property ladder, or I want to do this. I want to remortgage. Unfortunately, with certain restrictions maybe in the high street, that's where the specialist lenders come into it. But again, it will be at a higher rate. And sometimes the perception of the likes of Kensington is that I'll put you with these guys for a couple of years. However, when you clean your act up or things change, I'll put you back onto the high street. But things can happen. In a 2-year or a 5-year life of a product. But with our product innovation and, we have got some good rates out there. It isn't necessarily now a stepping stone. People are sort of retaining and staying with Kensington.
Just answered my next question. I was just going to say to you, do you find that being higher priced or having little pockets of niche areas that you'll lend to in certain circumstances, people stay with you for long? Because you find we'll speak to some customers and be like, I've been with Lloyds for 20 years. They've always done my mortgage. But do you find people stay with you for that long? Or?
Yeah. And I think, maybe because of the niches that we've got, maybe around like using the latest year, something drastic changes in the market with competitors. But there may be a reason why someone's more than happy to stay, but as you might have come across some customers who've not had a mortgage review for years and are just quite happy to sit on that SVR. Obviously that's where brokers come into it, always reviewing the customer's circumstances. But we're not, I wouldn't consider us any, now a stepping stone lender. People will hopefully stay with us, and when we roll out our product transfer, which I hope is imminent, there'll be an opportunity there for customers to stay with us, definitely.
Perfect. So if we make a recommendation to Kensington, which we've done plenty of times for a lot of self-employed customers, what sort of experience can they expect from you? You alluded to before, it's not necessarily automated, but just take us through that journey of, look, we've been recommended Kensington, my broker's going to put the application in. What's an underwriter's perspective now to get that case through to an offer? Yeah,
so how it generally works, we updated our portal back in October to make more of an upfront checks automated. So things like checking solicitors, checking ID, and obviously run through a credit search. So once it hits that full mortgage application stage, we encourage you guys to upload documents, which is the key documents, which is a declaration, income, whether it be self-employed income or employed income, self-employed income or employed income. So then the underwriter will have the basics then for them to make a decision. So that'll then sort of go into an underwriter's work queue. At the moment, sort of about 2 to 3 days, it'll get picked up. And the underwriter will then look at the whole case. We'll look at the credit profile of the customer. We'll be looking at the things like the income, because sometimes, Sam, somebody on a mortgage application could say, right, Sam, I earn £50,000 a year. You get the pay slips in and go, hang on a minute, they don't earn £50,000 a year. They earn £50,000 a year if they had on like various things like overtime. So the underwriter will just make checks on that. They won't be looking for anything to like pull you up on, but there's little obvious things like, when people are looking at using things like overtime is it consistent? If someone's trying to annualize a figure where they just see overtime on one pay slip, they want that consistency to give them that comfort. Little things, on pay slips, such as, student loans or high purchase loans through companies. So the underwriters are looking for these things. And again, it's not there to trip you up. It's just making sure that case then can move onto its next stage. So that would be our process for everything's okay. They'll then instruct the valuation and provide you with a shopping list to then ask for any other outstanding items. And that's usually going to include things like proof of deposit. So you guys go away, gather all the bits and bobs. And so, for example, if it's a proof of deposit, that's when an underwriter is going to get back on their work queue. So they know the case, they know the ins and outs of it. So what they've asked for, hopefully things will be stacking up. And that's when sometimes you'll be going, why asking this question? And these are the guys, they'll pick up on these things. So, and again, it'll go we'll talk about it in a little bit towards the end of this episode. But yeah, that's what the underwriters then do. And it's a manual approach, but they will be asking questions to say, what's this and what's that? If everything stacks up, they'll then move on to the next stage, which is generally, at that point, all them checks have been carried out, your income, your valuations come in, proof of deposit's fine, you get your mortgage offer into completion. That's in a perfect world. But in a specialist space, Sam, as I'm sure we've had conversations where customers' income may be self-employed, so they might have to then go to an accountant, get some supporting information from accountants. So it can be quite complex, but I'm sure, having dealt with Kensington, and when that Kensington customer sitting in front of you, that isn't going to be a high street customer. That is going to be your specialist customer. Yeah. And it's then meeting that expectation of the customer saying, we're going to be using a specialist lender for this very reason, maybe for your latest year's accounts, maybe because you've taken a bounce back loan or some sort of government grant over the last 12 months. So these are the guys for you. However, it's going to be more of a manual approach, and they will be asking a few questions. And again, I always say things like, proof of deposit, if these big transactions going in, someone's going to be asking questions. You may have asked the question, but the underwriter's always going to be covering them little things off.
Thanks for tuning in to the Mortgage Heroes podcast, proudly sponsored by Hamlet Homes Warrington, your Warrington property experts. So just following on from that, Phil, talking about the underwriting processes and what they might pick up on. If I'm a first-time buyer going to go with Kensington, what do I need to look through my documents? I think they might ask me questions on that.
Yeah, there's a few simple things. Is let's pick up on pay slips, is just making sure, what income you're declaring to the mortgage advisor stacks up, making sure that, if you've got the bank statements and the income that they tie in. Some employers, will say someone's weekly income is £400 and it's paid in the bank statements as £350. Why is this? Just making sure your bank statements are well conducted. Most lenders tend to ask for 3 months. Kensington, as a rule, we don't ask for bank statements up front unless the underwriter does request them. But, your bank statements, you just need to be making sure, there's no sort of mispayments. There's nothing, any charges from the bank, any reverse direct debits. They really need to be well conducted. I think you might have mentioned before on LinkedIn where someone's organised a stag do or is paying for a meal and his friends think it's quite funny to reference something illegal as a joke. Little things like that, it might be equally as awkward for you having that conversation with your customer, especially if it's with the partner, as it is, maybe the underwriter ringing you going, Sam, can you explain what XXXX is? So yeah, I think it's just looking at them. And as I say, going back to what I said before, like large transactions going in, it could be, a completely legitimate source, like a parent said, right, I'm going to pay £20,000 into your account, put it into your savings, and that's for your deposit. Now, an underwriter will not know that maybe that money has come from that source. And again, we're not trying to trip people up and saying, there's something untoward going in. It's just making sure you've got that clear audit trail. So just making sure your bank statements are well conducted, and your pay slips are in order. And you're collating your things like your P60s as well. I can remember when I was young, pay slips and just basically being financially knowledgeable. You just didn't think of these things until you come to this. We go back to people going, we need your P60 or your P45. Well, I've not got it. There's ways around it because obviously you can write to employers for these things, but it makes things a lot easier if you start building up this sort of file for your mortgage.
Just make sure that you're really on point with exactly what's going to be required of you, but understanding what questions might be asked.
Absolutely.
Now, one question we always get asked, or not possibly a question, but a preconception people call to book an appointment is, I've got 6 months pay slips now, I've got 12 months employed, I've been online and I can get a mortgage now. But one of the most talked about things is how long you need to be employed in a role. Some lenders want 6 months, some lenders want 3, some want your first pay slip, some will even now base your mortgage on your employment contract 3 months before you're starting to go to work. So where does it end? How does a lender decide what their criteria is about someone being employed and what they're going to need to see?
Yeah, it's a good question. I'd say personally, it's probably going to be down to appetite, what that lender's actually after, what sort of particular loan to values maybe gives them that comfort. So they'll probably have something pretty much set in stone. Like, for example, Kensington will say 3 months with a 12-month track record. Again, I'm aware of other lenders who will take on somebody income that, as you say, they're not currently receiving it, but they're going to get a promotion or they're going to have a new job. Yeah, it's purely down to that particular lender. So with Kensington, for example, so if we're dealing with somebody who may have had some adverse, we may want that comfort that they've got a job for 3 months, they've got quite a good track record. I think anybody would maybe have a dim view where somebody's gone from one job to another job, completely different industry. As I say, sometimes this is where the value of your BDM comes into, because maybe we can look at a case and go, actually, we're a mortgage advisor with a particular broker for 5 years. They've just started with another brokerage. They're on a better salary. They've only been doing it for 1 month. And that's where you sort of, as a BDM, you can work with the underwriter, you can work with the broker and say, actually, we're quite confident of making this case as an exception. We don't always want to do exceptions, because sometimes I call them slow nose. So we might sit on something and actually go, Sam, we can't do it. But I think that's sort of the benefit of a good BDM, is knowing what the appetite is with the underwriters as well. And sometimes not necessarily getting around policy, just looking at ways we can sort of move these cases forward. And I always try and be really honest with brokers. So I use that as an example, mortgage broker to a mortgage broker. But let's say it was a lorry driver to a mortgage broker. I'd probably go in, well, actually, I think we need 3 months or the probationary, because the two jobs are completely miles apart. So again, I'd say a lender will, you can hear 6 months, those that will take them without probationary. I'd say that's down to their appetite. And I'd say they're probably more, the ones you've mentioned where they might be in the job for 1 month or have not yet started that job, that might be high street sort of lender who may be a bit more comfortable with that. But as I say, we work on a 3-month rule, but there's nothing stopping us having that conversation where the customer's gone from like to like jobs.
So it's definitely more than a computer says no. It's more of a, let's take a manual look at this and see if we can actually help these customers get where they need to be.
And a lot of the inquiries that we get, you sort of have to look at that view. It meets policy or it's way off policy. Don't even take it to us. But sometimes you go, and I think that's does help with having an underwriting hat on sometimes, is going, is it worth presenting this to the underwriter to see if it's a way we can get round it? But again, we're working in a very fast-paced environment, and if I said to you, well, I'll get back to you in about the end of the week and it's a Monday, maybe that's not quick enough for your customer, especially got estate agents breathing down the neck.
Yeah.
And again, as a BDM, I really want business comes to Kensington, but if I don't really think it's going to fit, or it's going to be, hard work for you, I'll reference, I will reference our peers, I'll reference some of the other lenders out there who may have that appetite for that particular case as well. So I do think how the market's changed drastically. There's a home for everybody.
Yeah.
So I won't just say yes to all cases you put to me just so I can get them through. If I think it's going to be a big, last thing I want, Sam, is you ringing me up on a Friday afternoon, when we're about all to go to the pub going, this is fallen through because you said it'd be okay and it isn't. So it's all about honesty as well, matey.
Sounds like my life all the time. Friday afternoon, the case is going through.
I think it might be some of the conversations we've had over the last few months, mate, on a Friday afternoon.
Sorry to disturb you at 6 o'clock on a Friday, Phil. Have you got a few minutes, mate?
Any time for you. Any time for you, Sam.
So going back to what we talked about, the underwriting processes and how internally you look at them and a point of valuation. Now, the world that we've been in the last 18 months, house prices have been up, they've been down, underwriting policies have changed more than I've changed my socks, it seems. And every day's been like a school day. But one recurring thing is down valuations now. If somebody submits an application with Kensington, you appoint the survey, it comes back 20, 30 grand under value. What advice could you give to a first time buyer and guiding them what the next steps could be for them?
I think it's a really good question. Now, sometimes you see properties, I've been speaking to a broker this week where the property's got potential structural issues, these problems with the roof. But, I remember being a first time buyer, about 2001. I had no clue, if someone said to me, but it was my dream house and I really wanted this lovely 2-bedroom terraced house in Stoke-on-Trent, and if someone said, there's a few issues here, I'd have been completely oblivious. When these valuations are carried out, or a lender's making a decision maybe not to lend on them, it's sometimes worth, looking through, beyond the rose-tinted glasses and going, I want this property. It's going to go, you're probably better off saying, actually, this is guidance from a surveyor chartered surveyor saying these potential issues with that property. Then as a first time buyer, I went from, having a disposable income to suddenly having to be responsible. Have you then got the money at these recommendations? That property might be. So sometimes, with the regards to a down valuation, we have seen property prices, especially, in certain parts of the Northwest, are just, I think, South Manchester, for example, people are paying £40,000 over the odds. First time buyers, haven't got that opportunity. And I think sometimes you have to sort of sit back and go, right, is this house for me? Or is there a reason why that professional is downvalue my property? Again, without getting too political, estate agents' valuations and mortgage valuations are worlds apart. So, it's going on the basic mortgage valuation as well. So things like, people putting in higher asking prices, when it comes to get valuation, that's going to be a more realistic, the lender's version of events, so to speak.
Now, let's say your survey went out to a house that I was buying and he said, it's down valued 20 grand. What do you want to do? What if I was still hell-bent on, I want to buy that house and I'm going to put the money towards it? Would you still allow a mortgage to go ahead on your lower valuation as long as I threw the extra money towards it?
Yeah, so in that respect, if the customer's willing to go ahead with a lower valued property, there's no issues there, providing they can fund the deposit, but as you know, first-time buyers, money's very tight.
Yeah.
Maybe there could be, issues somewhere, I'm probably getting a bit too carried away here, but, if we don't like properties that sold at undervalue. So on the other side of the coin, you might have a property out there that's worth £200,000, but the customer's buying it for £150,000. And that's when an underwriter might go, well, that doesn't seem quite right. So there's two sides of it. Is it people paying over the odds or people paying under the odds as well? So something, again, to be aware of. But I think, you hear of stories where people are buying houses, there's structural issues, but they just really want that house because it's right next to where they want to be or it's near to the family. Sometimes you've got to sort of step back and go, and I always say it's not like buying a pair of jeans, a house, this is a long-term investment and it can come with all its problems as well. So if a professional is telling you, there's potentially some structural issues here, or, it needs rewiring, have you got the money to get it done? And maybe you might want to go for another property that's, like I say, back to my 2 up, 2 down in Stoke-on-Trent. That thing cost me £31,000.
See, I always use the analogy with first-time buyers that buying a house is like having a kid overnight. So you don't have to wait 9 months. It's only 3. If you're not careful, it's going to cost you more money. If you don't look after it properly, it's going to come and bite you in the backside to cost you more money. If you're not looking after your mortgage, it's going to cost you more money and cause you more stress and headaches. And you feel like you're going to age. The longer you have your house, the more you age. And the more older inside you get. So sometimes it can feel like overnight you've got this big overbearing family member. So you're probably right in what you're saying is that sometimes you got to step back and reflect and go, is this actually going to be the sort of thing that's for me to be carried forward? Yeah, absolutely.
And I think sometimes you do get the challenges from brokers, property's been downvalued, £10,000, £20,000, I want to put an appeal into the valuer. These guys are professionals. They would have carried out various research within that area, and they get what's known as comparables. So if you're looking at, say, a 3-bedroomed, 7-detached house in WA4 of Warrington, they won't be then sourcing properties in South Manchester and going comparable. We're dealing with properties when they're very very close to each other, very similar to each other. So, when we do get these sort of challenges, and it's probably quite disappointing in the mortgage process, everything's been signed off, them bank statements have been signed off, the income's been signed off, we get to the valuation, and then someone comes along and say, well, we found this, or, it's probably in your interest to go, actually, it may be best to walk away and look for something else, an alternative property.
Okay, so let's say we've got past that hurdle and we're either throwing more money at it or we've renegotiated the purchase price or we buy something else. What does completion look like? So when we're speaking to first-time buyers in particular and they're looking at completion and they're excited to get the keys, from a lender's perspective, when you're in relationships with the solicitors, what are you looking for on completion? Is there any final checks to be made? How do you release the money? What is that sort of completion timeline like?
Yeah, so generally, a mortgage offer will go out. There'll be various conditions on that mortgage offer. For example, there might be a requirement of timber and damp report. There could be numerous various conditions, which is then the solicitor's job to go through the mortgage offer. I did have a broker query the other day where a client had gone through a mortgage offer, which I thought was great, because I've just recently remortgaged. I haven't even gone through it. So, but to pick up on these things could be potential issues. So hopefully, solicitors, go away, do their job, come back to the lender, say, yeah, all conditions have now been satisfied. We'll carry out checks to make sure they have. And then what's known as a certificate of title is then sent over to the lender. And this is the form that basically is then requesting the funds from the lender. For the purchase. So that's pretty much the final bit. So when the certificate of title comes in, trust me, it's like everything's...
This is it.
This is it. Things can happen, at the 11th hour. It doesn't happen very often. So so that should be the general process, is the solicitors and the completion department working together to make sure we meet that completion date. And that could be agreed between, you've got a chain of people and it all has to fit in everybody's, day-to-day living.
Yeah.
So we've had a recent spikes of late around completions where customers may have heard of the stamp duty holidays, where the government have relaxed the rules, and this extension of the stamp duty holiday is coming up to the end of September now. So we're looking to get all these cases over the line, so people aren't going to be impacted by stamp duty post September the 30th. So I think it's a matter of making sure the solicitors and the completions team are working together to get that case completed. All the hard work's pretty much been done. I think the hard work is what you've been doing to get to offer. But as you know, things can go wrong in between offer and completion.
Yeah. So one thing that we do get often asked, and you'll see this with people buying new builds, is my new build's not going to be built for 6 months, but I've got my offer. Can I go and get something on finance? Can I get a sofa? I'm changing my car. Are there any final checks that people need to be aware of that Kensington do before they release the money that could impact it ultimately completing?
It depends on timescales. I think generally the normal house buying process, you said, is around about 3 months. So that's, the offer's valid. It's going to be valid for around about 3 months anyway. So everything's pretty much tied up. And then we can, like I say, we can move on to completion. In the new build space, we know for a fact, as our offers are 6 months because of the whole process, and there's nothing stopping. Get to that 6 months. The build's not completed. So the developer's asking us then for a further 6 months. If we're reaching a 6 month level, an underwriter's going to carry out a fresh credit search. So if your customers, turned up for the first appointment driving, an old Metro, and then, 6 months later he's coming to drop his documents off for the re-offer, he's driving a Porsche, you might want to ask him where he's got the money from, because if it's on finance, it might scupper his chances of getting his mortgage. But them situations do exist, where somebody may have taken the eye off the ball, the underwriters carried out a fresh credit search because of how long it was since we last did one. So they could have gone on holiday, forgot to pay the credit card. Worse, they could have forgot to pay the mortgage. So it can be 11th hour, it can be a massive problem.
So people just need to keep the wits about them then towards the end.
Yeah. So that bit I said, get that first 3 months sorted for your bank statements, your pay slips when you come to for your mortgage advisor, for your first mortgage interview. Just carry on that conduct to at least you complete it, and the estate agent hands you keys, and then whatever you want to do after that.
Perfect. Well, Phill, it's been a pleasure having you here. But before we let you go, one thing we're asking all our guests is, as a first-time buyer, what's the one golden nugget you can give them to make sure that they adopt that when they're looking to buy the first home?
So to the golden nugget, I think the golden nugget's finding a good mortgage advisor.
Hello.
someone like yourself. And it's an indirect way of me calling you a nugget as well, Sam. But no, I think finding a good mortgage advisor, but for the customers themselves, is once you've got that relationship with the mortgage advisor, this person's going to be, dealing with a lot of confidential information for you. So I think, is honesty, for a customer, a first-time buyer. I'd say for myself, naive when I had my first mortgage application, say back in 20 odd years ago, these questions they ask for, you have any defaults, any CCJs, or, what's your income, don't be shy of telling Sam that, I did have a CCJ, something happened, it's all about honesty, because what you don't want to do is put that case on their behalf. An underwriter says, well, Sam, you've not told us about the CCJ, then you go back to the customer. I think honesty, getting your house in order, like you say, your finances, making sure your bank statements are looking clean. They've got none of them sort of jokey references your friends have put in. Making sure, if your parents have, or put money into your account, or, I sort of have a bills account, and I've got when we pay, my pay's paid into, and a spends account. So I move money around. So I'm a bit guilty of it, but it's just trying to make sure everything's sort of transparent and clear.
It's got to make sense.
Yeah, it's all got to make sense. And as I say, I think honesty is the big one. And probably nothing more disappointing than when you're spending your time putting a case forward on behalf of a customer, and they haven't told you these little things, these little defaults, or these little anomalies that, we've got to be transparent. And as I said earlier, there's pretty much a home for everybody these days, where it's maybe adverse, maybe complex income. So the more information that customer gives you as the mortgage advisor, the better it helps you to then present that case and find the ideal lender for them. So I think the golden nugget is the honesty, and just making sure that paperwork's all up to date, and hopefully I always say almost underwriting the case before it gets to the underwriter, because if you don't, because I say if you don't find it, they will.
Yeah, definitely. Well, listen, there you have it. So if you're a first time buyer and have seen some of our content before, I always bang on about making sure your paperwork and your documents are all in order. And now you've got a lender telling you as well. So if you are looking at buying a house, just make sure you've got everything in order before you pick up the phone and we're booking that mortgage call. Well, Phill, pleasure having you on, mate.
Cheers, Sam. It's been great.
It's always nice having a chat to you. And you've been listening to the Mortgage Heroes podcast, which is proudly sponsored by Hamlet Homes Warrington, your Warrington property experts. And we look forward to seeing you on the next episode.